the one that, okay, let's see. I don't know. Did I make some horrible mistake? Stop share. I don't want to stop share.
I think you just have to select the PowerPoint you wanna share, and it's gonna be on your screen. I'm not sure.
Click on this again. Okay, now it's coming back. Is it okay now?
Yes, now we can see the slides.
Well, anyway, let's work on this basis. طيب خلاص. بسم الله الرحمن الرحيم. Alhamdulillah wa salatu wassalamu ala rasulillah. We want to discuss these issues today on Islamic Bank. What is Islamic Bank and what risk they take and what they are, how do we deal with these 8 points, inshallah. So we will discuss them. As an introduction, let's try to define what is an Islamic commercial bank and how did it come about? Okay. Islamic commercial bank, and that means, remember that these 3 words we are talking about Islamic, and it is a commercial bank, not an investment bank, for instance, or not any other financial institution. Okay, an Islamic investment bank is a depository monetary institution of financial intermediation committed to run all its activities in compliance with the Islamic tenets. Let's try to analyze this definition quickly. It's a commercial bank, so it does what other commercial banks do, which is what commercial banks do essentially is financial intermediation. Now, it is a depository institution. Depository means it depends on deposits. Deposits usually in a commercial bank make about 92 in percent of the total balance sheet. So we are talking about an institution that really uses funds from depositors. Like any other commercial bank, in fact, like the interest-based commercial bank, the same thing. Equity will be maximum 8%, and the dependence on deposits is about 92% or more sometimes. Now, it is a monetary institution. It's part of the monetary system in the economy. It's not like, for instance, an institution that may give financing, but it may not be intermediary, may not depend on deposits on fund or on funds deposited by other individuals or corporations or companies or the government also. So it is a monetary institution that depends on deposits mainly. And what it does is financial intermediation. And financial intermediation, we defined it before, but it is the activity of acquiring resources from persons, whether legal persons or natural persons, who have excess funds or excess properties that they don't need them at the time, and give them to those who use them either for business or for consumption. Now, the difference between an interest-based commercial bank and an Islamic commercial bank is clear in the last sentence: committed to run all its activities in compliance with the Islamic tenets. So the idea here, it's really all its activities. That means its relations with depositors, its relations with customers that use funds or use funding, uh, and also its internal relations, including governance, including relations with employees, and so on and so forth. For example, one of the issues that we discussed and it has been discussed in many Islamic banks, the leaves that are given to employees, and what leaves that could be required or not required sometimes. Uh, some kind of leaves could be an issue really, where a married woman, her husband dies. She's supposed to stay home for a period of time. Of course, there are exceptions of this staying home for that period of time, which is 4 months and 10 days. Uh, a woman who needs to do that, would she be given leave of absence, paid or not paid? How would she be treated? This is an issue that is also discussed by the Sharia boards in Islamic banks. So, relationship with employees is also part of what is included in being compliant with the Islamic principles and Islamic tenets. Okay. Uh, Islamic banks are financial intermediaries. They collect savings from income earners who have surplus and distribute them to entrepreneurs and consumers who need them to finance their acquisition of goods and services. The normal thing in a commercial bank is you have much higher, larger number of depositors, a lot more than the number of customers you give. In other words, one of the functions that a commercial bank does is really pool resources from large number of people and advance them to a smaller number, again a large number, but it is much smaller than the number of depositors. That's natural because of the issues of risk management. You will be more selective in to whom you give funding, and also because usually those who need funding are smaller in number and larger in each person's need quantity, or the quantity he or she needs, or if it is a corporation, for their activities. So usually they require larger sums in each financing transaction, whereas depositors, we can take them for any small amount, it doesn't matter. Now, Islamic banks make their financing intermediations on the basis of several contracts that do not include lending or borrowing, because interest is prohibited in the Islamic law. So obviously, lending and borrowing is ruled out from an Islamic bank. But really, as we will see in a few, in 10 minutes or so, we will notice that they are not ruled out completely. We may still use lending or borrowing, but it will not be at all on interest based. It will be definitely without any interest. And we will notice that and see it in as we go by. Okay. Islamic banks were created voluntarily by concerned individuals to provide well-known banking services or activities without violating Sharia. Now, uh, the first Islamic bank was created as an intergovernmental bank in 1974, or at steps really. It has several steps in its creation. In 1973, a declaration of intent to create a bank was issued by a group of the members in the Organization of Islamic Cooperation, OIC, Organization of Islamic Cooperation. This organization, I think, was created in 1962 or 61, that early, on call by several governments at that time, the government of Algeria, the government of Somalia, and practically the presidents of these two governments, along with the president of the government or the head of the government of Saudi Arabia, these one king and two presidents, they correspond together and decided to call for the creation of an organization that came to be known later as OIC, uh, Organization of Islamic Cooperation. Uh, Many countries accepted that, and the number of countries members in this organization today is 57 countries, of which Suriname is one of them in the southern or western hemisphere, but in South America. And all the others are in Asia and Africa, and there is also, I think, one country in Europe, that's Albania. The Bosnia Herzegovina, to my knowledge, is not yet a member in it, although it is more or less a Muslim majority country. Muslims in it are about 55%. But the point that they were created voluntarily and under laws that were not so friendly to them was an important point. The, the OIC, the Islamic Development Bank, was created with the intent, declaration of intent, in 1973, but then 25 countries signed the agreement of creating this bank, Islamic Development Bank, as an intergovernmental bank. The agreement was signed in 1974, and in 1974, the bank physically started its operations, of course, collecting capital from member countries. And it was only an intergovernmental bank that does not deal with the private sector. But the private sector banks that came shortly later, in 1975, Dubai Islamic Bank, it requires a special decree from they call it president board, but it was really, the structure of the United Arab Emirate. It's emirate with a prince in each one. There are 7 emirates. They unite together, and they called the head of the largest and richest emirate among them is considered always the president of that country, as that consists of these 7 autonomous emirates internally. They are together externally, and they have one external relation, I mean, with other countries. So the head of it is not called, is one of the princes of these 7 princes, but he is the prince of the largest and richest one among them, and that is Abu Dhabi, the Emirate of Abu Dhabi. So he is at the same time the Emir of Abu Dhabi and the president of the United Arab Emirates. So the Dubai Islamic Bank, which was established in 1975, required a special law or decree by the president of the country, because it was in exception of the banking law that was already there, and they had a central bank since 1971, and the bank came in 75. So there was a need for a special decree from the king, so to speak, or the president of these emirates, to allow it to be established and start functioning. Similarly, Faisal Islamic Bank, Jordan Islamic Bank, before it came, and came again with a special decree by the King of Jordan, uh, as an exception from the banking law that existed there in Jordan. It was established in 1977, and in 1978, the Faisal Islamic Bank in Cairo of Egypt, Faisal Islamic Bank of Egypt, came in 1978 again with a special decree by the president of Egypt at that time, Anwar al-Sadat, and as an exception of the banking law that was in existence at that time. So all these banks came in exception of the prevailing laws. And so they came really uh, at no known precedent in that sense. But what they do is what banks do. Therefore, when you give a deposit to an Islamic bank, you expect it to behave like what any other commercial bank does, without even having these specific conditions mentioned in the contract itself. It's enough that it is known as a commercial bank. Okay. Uh, Islamic banks in the Arab world created a new political alliance that unexpectedly emerged out of working relationships between the rich and wealthy, and on the one hand, and many Sharia scholars on the other hand. That was an interesting issue. For those of you who are concerned, I refer you to my article, which came as chapter one in a special issue by the Thunderbird Journal that was issued in Arizona. Uh, is it Arizona or the one that is east of New Mexico? Uh, Thunderbird University has in I think in 2001 a special issue for Islamic banking, and my article, The Alliance Between Sharia Scholars and Muslim Capitalists, came. But يعني because these Islamic banks were, yes, established by the Muslim rich persons, like the late Muhammad al-Faisal, son of King Faisal, and the late Saleh Kamil, who is also a Saudi, but was also one of these rich people. They had to cooperate with some Sharia scholars and take them with them as advisors and have a close contact with them. And that created really a kind of alliance between a group of Sharia scholars who worked with Islamic banks and these rich Muslims. Well, that affected the behavior of both of them, in fact. And we may notice later that there were some fatwa that came from some Sharia scholars that were really a reconciling fatwa rather than really good compliance with Sharia fatwa, like the fatwa of Tawarruq and the fatwa of Ina and others that came later anyway. But it was interesting to study this alliance between Sharia scholars and the Muslim capitalist. Uh, Definitely, Muslim capitalists put their money in these ventures that were at that time extremely risky at the beginning of the establishment of Islamic Bank, because nobody knows how it is going to go and where it will at the end will land. How will it land? How would be the acceptance or rejection of it wherever they are established? But these relations between Sharia scholars and the and Muslim capitalists continue really to invigorate the Sharia scholars who influenced substantially segments of the public opinion in most Muslim countries. One consequence is that the Sharia scholars encourage their followers and the wider Muslim public to use Islamic banks. Without their encouragement, really, Muslim uh, individuals, all depositors, and all companies also in Muslim countries would be kind of hesitant, really, to deal with the Islamic banks at the beginning. Let's see what's next. I don't know now where, how do I go to the next one? I don't see any signals here. Okay, okay. Then, after the first Islamic bank, the oldest Islamic bank in contemporary Islamic history is the Malaysian Pilgrims Fund Corporation. This corporation was really established in the year 1962, and since its establishment, it grew in at different stages, but it was an organization that collects savings from individuals essentially and use them to make profit for them, to make their funds grow, and that helps them more and better to make the trip of Hajj. Indonesia is far away from the Hajj area in Hijaz, in the Arabian Peninsula. So they at that time, and in 1962, there was no oil yet in Malaysia. So the Hajj fund was really only a fund created by the government to help Malay Muslims be able to accumulate more funds by the time they make the Hajj trip. Anyway, the fund was also in charge of the services that related to Hajj, including getting the visa for those people who will make Hajj, including running their administrative matters in the Hajj trip and so on, and organizing the Hajj trip for them. But it really, without being called a bank, was called simply a corporation or a fund. Hajj fund, Tabung Haji. Tabung means fund, and Haji is pilgrims. So it's a Hajj fund really, but it behaved and still behaves really as a full-fledged bank in accepting deposits from individuals and making investment and allowing them to use their deposits for any other objective whatsoever. Yet it was not considered a bank, was not also treated as a bank by the central bank until today. It's not considered a bank by the Central Bank of Malaysia. A year later, without knowing anything about this precedent, an institution was created in Egypt, in the northern part of Egypt, in a small, at that time, village. Now it's a town called Meet Ghamr. That was in 1963 by a venturous university professor, the late Ahmed al-Najjar. He created this kind of institution that again collects savings and invest them with the local businessmen. And in a small town, in a village, everybody knows everybody else, and the level of trust would be definitely high. Islamic Development Bank came in, starting with a letter of intent in 1973, was established physically in 1974. It started its operation really in 1976, as we will notice it later, it will come to us. And then the Dubai Islamic Bank came in 1975, followed by Jordan Islamic Bank in 1977, and in 78 by Faisal Islamic Bank, then the Kuwait Finance House, though called Kuwait Finance House, but it was a full-fledged bank under the supervision of the Central Bank of Kuwait. So the Kuwait Finance House was really a bank, but although it was not called a bank, but it was a commercial bank. In Kuwait, it came in 1978 or probably 79. I'm not exactly now sure about it. Then Faisal Group and Al Baraka Group. Faisal Group belongs mainly to the late Muhammad Al Faisal, son of King Faisal of Saudi Arabia at that time. And then Al Baraka Group, this is a group that is in which the main owner is the late Sheikh Saleh Kamil, rahimahumullah, came and established several Islamic banks in different countries and different places. Now let's look what are really the differences between an Islamic bank and a conventional banks. So let's take Islamic banks on one side and conventional banks on the other side. In Islamic bank, the focus is on the commodity or the service. In a conventional bank, the focus is on lending. And in lending, you are concerned about the amount of interest you take and the security of that loan, how much collateral it has, etc., etc. But with give the best rate of return and give the best collaterals and best guarantees and assurances that the financing will be paid back to the Islamic bank. If you use it for a non-permissible commodity, the Islamic bank will refuse all that. So the money attraction or the return profit attraction and security attraction comes later, and what comes first is what are you going to finance? What do you want to finance? What do you want to the financing? And we look whether this is permissible or not according to the Sharia criteria, which, if you remember, we discussed it before, that it comes from the basic the scientific criteria, because the verse in Surah number 2 says you have to weigh the benefit and the harms. And this weighing of benefits and harms is only a scientific matter. We don't accept in it any superstition, any claim, any theory. We only take what is beyond doubt knowledge. This is why, for instance, now in Islamic Bank, you cannot, it didn't happen anywhere in the world, although Islamic banks may have made mistakes, but none of them has ever financed liquor or cigarettes, for instance. And cigarette is not mentioned in the Quran. It came only in application of that rule. Okay, so this is the emphasis, the focus in is on the commodity, on what you are going to finance, commodity or service or asset, whereas the focus is on lending in a conventional bank. Uh, that gives bias to the thing, to what you are going to finance. Whereas in the conventional bank, it is biased to the rich, because the rich is one who is able to give you more return and one who is able to give you better security. So here there is bias to the rich, whereas in Islamic bank, the bias is not in the opposite to the poor, but rather the bias is to the commodity or service or asset you are going to finance. The next point is both of them take depositors, but depositors in Islamic bank are partners, because you take them on the basis of contract, that is contract of mudaraba, and mudaraba is a form of partnership. They share with you in both profit and loss. They share the risk and they share the profit also. Whereas depositors in a conventional bank, you take them as creditors only. So you have the deposits, all of them are creditors. Uh, the Islamic bank will definitely be socially friendly because it does not accept to finance anything that hurts. Whereas the conventional bank is both socially and morally non-committed. It may finance sin activities and it may finance non-sin activities, good activities, but it's not committed to either one. Uh, there is morality again, obviously, in the Islamic bank because we don't accept to finance anything that is immoral, and the definition of it is scientific. Whereas in conventional banks, there is no such commitment unless the board of directors made such a commitment. There are some banks who made this kind of commitment, but majority of interest-based banks do not do that. The basic structure in the Islamic bank of the management and even of the institution itself, it works basically on wakala because the major source of funds is from depositors who are partners on mudaraba basis, not really creditors. So here then the basis of taking decision in regard to these resources you get from your mudaraba deposits is wakala, and they are partner with you. Whereas a conventional bank, the principle of management of it is proprietorship, because when the bank gets loans from time deposits, these loans are transfer ownership. So it owns the fund and it becomes under liability to the creditors, to the depositors. In the Islamic bank, the bank or the shareholder equity or the bank as an institution does not become under debt to the major part of depositors who are depositors on mudaraba basis. The next point in because Islamic bank finances only on the basis of leasing, sale, leasing, or sharing, it is by definition developmental. Conventional bank is not necessarily developmental. It may be when it finance development project, and it may not be when it finance payment of debts, for instance, which is only transfer of wealth from one person to another, or payment of activities that are harmful and non-developmental to the economy, like gambling in Las Vegas, for instance. Uh, in the Islamic bank, you eliminate all virtual transactions. In a conventional bank, you accommodate virtual assets and virtual transactions. Options, for instance, futures, are not acceptable and cannot be financed in Islamic banks, whereas they are financed in conventional banks. It rejects sale and trading of debts. The main activity in a conventional bank is sale and trading of debts. It keeps resources in the real market. It does not allow resources to be used for these pure financial transactions, whereas in the conventional bank, in the interest-based banks, That's not the case. Resources are used for financing options, futures, and virtual assets. The increment in the Islamic bank, that is the profit, is real. It is a real growth of wealth. The profit is really generated because sales generate added value, lease generates added value, and of course, musharaka and mudaraba, creating corporations, increase the capital capacity for production, and that generates added value ultimately. Whereas in the increment in the conventional bank is only a transfer of wealth, not really an increment of wealth, including interest itself, because the loan contract does not generate added value. Uh, Now, let's look at resource mobilization. In Islamic bank, we have shareholder equities. Similar in conventional banks, we have also shareholder equity. I made the next one in larger font because depositors, it is equity here in the Islamic bank. And it is called, in fact, in depositors' equity. It is mudaraba based, and mudaraba create a partnership between a skilled manager, which is the bank here, and the fund provider, with the objective of making profit. Whereas the counterpart of this in an interest-based bank is time deposits, which is loan or which are loan based. The next one, we have demand deposit, and notice here it is based on loan. And this is where we want to talk about it for a moment. But it is the same thing, demand deposit or current account in the interest-based banks are based on the same loan contract, similar to time deposit, but without interest. Now, in Islamic banks, the bank takes funds on current account. When you deposit in an Islamic bank, you have a choice. If you want to earn any profit, or you expect to earn profit, of course you bear the risk also, but then you put it in a mudaraba account. And mudaraba, that falls in the category of depositors' equity. If you want to use your fund at any time and being guaranteed you can withdraw it at any time and you don't lose on it, that you deposit it in current account, and the current account is a loan on the bank. And the characteristics of a loan according to Sharia, that it can be recalled at any time, so you can withdraw at any time. The bank should be ready to give it to you on demand at the moment you ask for it. Whereas the deposit that is based on murabaha, sorry, on mudaraba, deposits that are based on mudaraba may not be withdrawn at any time, and if you want to withdraw it, you may bear the loss that you cause to even to your partner, not only to yourself. So you bear the result of your action. لا just one moment please. إلا لنا تعطيني الحبة تبع الساعة 7 إلا ربع. The next one you have also in the in your liability side of the balance sheet, you have some other casual liability like unpaid bills or any other liability, which is Okay, it's the same. You have it in Islamic bank and in conventional bank, similar. You may have financing from other banks in Islamic bank, and this financing again goes in accordance with Sharia. There are several contracts which we will come to look at some of them later. In an interest-based banks, when a bank takes financing from other companies, they take them only on the basis of loan again. So in an interest-based bank, if the bank takes any financing from other banks, it is on loan basis again. Whereas definitely if it happens or when it happens in the Islamic bank, it's not on loan basis, rather is it would be either on mudaraba or musharaka or murabaha line of credit or musharaka line of credit, which we will discuss later. That's for resource mobilization. Let's take a quick look at resource utilizations, the asset side of the balance sheet of a bank. In Islamic banks, you have murabaha sale, but murabaha sale create debts. So you have debts. Sorry, the right side. I have it wrong here, so please help me delete that. All of it is incorrect. Corrected, please, with you. And uh, in an interest-based banks, the bank gives loans to corporations and to individuals. So they have an item called loans here. Murabaha, we have Murabaha sale create debts, but it's not loans that we are given. We give goods and services for payment later. That's essentially the meaning of Murabaha. And in the this arrow should be here. I think each time I open it and close it again, I find this arrow changing place. Okay. Uh, Salam or istisna, these are other contracts, other ways of financing again that exist in Islamic finance. They are kinds of sale, which we will discuss them later. But again, the salam, sorry. Okay, salam and istisna create debt in kind. This debt is in kind is owned also by the bank on the asset side. When it gives leasing, leasing creates debt for the rental for future periods, unpaid rent yet, but it is a debt on the lessee, whereas the asset that is leased asset remains as a property. It's not rental, really. Here the corpus, not rentals, corpus. Okay, so the corpus, the corpus of the leased asset remains in the ownership. So this is property owned. Usually they call them leased assets. The corpus remains in the ownership of the bank. And by virtue of this ownership, the Islamic bank earns the rental. Then they may have some little of murabaha and musharaka. And these are equity that create equity with the customers or the corporations we have murabaha or musharaka in. And notice this is not practiced by a conventional bank. Then we have cash in vault or cash in banks, but without interest. Now, similar here, in the conventional banks, all what we have the uh, is only loans at different kinds of loans, and cash in vault and in banks, but this here is with interest. Okay. When it is in other banks, it is with interest. When it is cash involved, then it is with, of course, no interest. But loan, we need to merge all these cells together because all of it is loans on customers, and we have cash involved or cash in other banks. If we take in both Islamic and conventional, the treasury activities in a conventional bank, we have uh, government bonds, corporate bonds, commercial papers, other debt securities whatsoever. Many of these debt securities are created and fabricated, etc., etc., like what happened in the crisis of 2008. Whereas in the Islamic banks, you have only one item that the treasury can make activity with: buying sukuk and selling sukuk. Sukuk, as we will notice in the future, and it's coming in detail, sukuk are documents that represent, or securities call them, that represent ownership of assets that generate increments. So assets that generate increments could be either leased to a beneficiary, and the beneficiary pays the lease, and also through time pays also to buy bits of the corpus itself, or these assets could be in the form of shares with other companies and so on, will be kind of similar, very similar to shares in that case. So sukuk are of that kind, uh, could be either way, either like similar to shares, or represent ownership of leased assets. In both cases, they generate return, and this return could be predetermined in case of leasing, or non-predetermined in case of having sukuk, like shares in partnerships with companies, or in with corporations, other corporations. So these sukuk, and that sukuk is really the only item that the treasury activities in an Islamic bank can work with. No other item they may have. But notice again that the conventional bank, on the other hand, although there are different names of the securities, the financial securities they deal with, but all these financial securities are really debts, in the form of debts. They also deal with options and other futures, etc., especially future currencies. Okay. Now we come what Islamic banks do. Islamic finance is founded on the belief that only the use of the real market contract makes finance permissible Sharia wise. So, which means, what are the real market contract? They are sale in all its different kinds. Lease, again, there are different kinds of lease, could be ending with ownership or without ending with ownership, or sharing, and sharing could be again in different way. You may share profit, or you may share gross revenue, and in sharing the principal also, maybe a real asset sometimes, or maybe funds only, cash assets that could be used in transforming them into other goods and services. The immediate observed result is that finance sticks to the real market transactions and does not allow any financing to leak outside the arena of supporting the activities of production, distribution, and consumption. Earning by ownership is that a principle we've discussed it quite a bit, and I assume by now it is very established deep in our minds, in our understanding of Islamic finance. You cannot earn in finance without owning. So, owning an asset is a necessary condition without which the Sharia does not recognize any entitlement to the finance provider for its finance. This is also derived from fundamental human rationale that an owner of a thing is one who owns all increments generated by or in the owned property. You don't need to have your effort to generate an increment in your property. It could be by act of God, like rain coming on the land and grass grows on its own. You didn't do anything in it. Or it could be also by your own effort or by somebody else's effort, and you share with that somebody again the outcome or the increment. Ownership is the most important axiom for justification of return in Islamic finance. Without ownership, there is no entitlement for the finance provider. This is manifested in all three groups of constructed relationships of Islamic finance, which are the sale, lease, and sharing. So, in all these, you have to own, and then an increment may happen in your property. But without ownership, there is no finance really at all in Islamic system. Of course, as an owner, you bear the ownership risk. Is the other facet, ownership risk is the other facet which is associated with entitlement right. This means that ownership exposes owners to property risk so that they are liable for whatever may happen to owned property. Now, if I ask you, is market risk also a result of ownership? Yes, if your property is for the market, but no, if your property is not for the market. If my property is for my personal use, I am not exposed, of course, to market risk, whether liquidity or price. Whether the price goes down or up, I want to use my eyeglasses. It doesn't matter. I don't care what the price in the market becomes. My eyeglasses are going to be on my eyes anyway, and I will use them. This is not intended for the market. Now, if my property is intended for the market, of course, I am affected by the market risk also. I have to bear market risk. But again, the question comes, can I avoid that? Yes, if I have an assurance from a buyer before even I buy it. I have an assurance that if you buy this, I will buy it from you. So with this kind of assurance, I can safely buy buy that without exposing myself to market risk because I got that assurance from a buyer, a potential buyer, that if I buy this, he or she or it will buy it from me. So you can't say that market risk cannot be associated with ownership. Yes, it may be associated with ownership if your property is for sale in the market. And it may not be if your property is not for sale in the market, but also can it be even in properties that are for sale in the market? Can it be avoided? Yes, there are procedures where it can be avoided, and murabaha, as we will study it in detail, is one of these processes. This means that ownership exposes owners to property risk, but property risk here cannot be avoidable. It is always there. If you own a thing, you bear its risk. Uh, so that owners are liable for whatever may happen to owned property. Now, risk means in general, if we take it, I think we discussed this matter, but it's okay, take it as a quick repetition. Risk means a probability of loss or anything related to undesired outcome. The risk issue and risk map in finance may also be undertake some deep changes in when we apply Islamic banking. It is a fact that life is surrounded with risk wherever you do and whatever you own, but a matter which makes risk management a part of the venture of life itself for every one of us, individuals and corporations, and even governments at all times. Risk in the banking industry, credit risk resulting from default of borrower or debtor. Market risk, which results in negative change of assets value. You may not own these assets, but a negative change may happen and it may affect interest rate in the market or the rate of return in the market. Operational risk, which results from malfunctioning of processes of system or of human factors. An obvious human factor, operational risk, is cheating or making wrong, taking wrongly some assets that belong to the bank by an employee, and so on and so forth. All these are human element, but also external hackers could be also operational risk, and electricity breakdown may affect certain transactions that goes wrong because of that. So this is system and human element both. Other risk, of course, banks are exposed to legal risk, interest risk, reputation risk, withdrawal risk, litigation risk, etc. And all these can exist also in an Islamic bank, but also, as we will notice, that in an Islamic bank, we have more than that. Uh, an Islamic bank may face a Sharia risk that the employees in the bank or people who work with customers, they may make certain contract with a certain violation of the rules, although uh, templates of contracts are usually provided, are always provided really, template, and they use them as they are, but there are always special conditions or space for special conditions in these templates, and one of these special conditions may fall in violation of Sharia, and that may end up that the profit of this transaction cannot be earned by the bank. And when it is not to be earned by the bank, what do we do with it? Do we give it to the customer? No, we don't, because the customer got it on the basis of making profit for the bank. So we take this profit from the bank and give it to charity, because although it is not permissible, it is haram for the Islamic Bank, it is permissible for the poor and needy, as clearly in the exceptions for the poor and needy in case of necessity, that is mentioned several times in the Quran, that they can even eat anything that is prohibited because of their necessities. But remember here, when we talk about profit, it is the way of earning it because of a wrong condition, say in a contract, that makes it not permissible. It is not the profit itself. The profit itself comes in the form of money usually, and money is like any other money. There is no haram and halal in money itself. So if it is money, then it'll come like either a credit in the account, or paper in the hand, or coin in the hand. All these are forms of money, and this money does not carry the haram and halal in itself. When we talk about haram and halal, that relates to the way of earning it. And if the way of earning it is not permissible, then it is not permissible to you. That means that this coin, or this amount of money itself is not dirty, but the way it comes to you is what is problematic. When you give it to the poor who needs it to buy food with it, etc., that is for him, it is halal because itself it is clean, not really dirty. Accordingly, this new type of risk, the Sharia risk, is an immediate outcome of their compliance to the Sharia requirement. So we have what we call Sharia compliance risk that exists in Islamic banks. And as a practitioner, I've noticed that we did, as a Sharia board of an Islamic bank, more than once, we did require the management to take the profit of this transaction, take it to the charity account. You cannot take it as earned by the bank itself. Now, please allow me to go for prayer and come back after my Maghrib prayer. We still have 2 weeks before Ramadan. In Ramadan, we have to change the time. Anyway, I'm going to put what? Let's see where I got my other thing. Yeah, I will come back after prayer. Assalamu alaikum. I am back. Are you guys back? Hello?
وعليكم السلام.
Yes, وعليكم
طيب.
السلام.
Okay. طيب. So we go to the next slide. Now, how do Islamic banks deal with the risk? Okay. Of course, risk is not an asset, and this is why we don't accept the commercial insurance companies. We replace them in the Islamic system by cooperative insurance organizations instead of being commercial uh, that buys risk and sells risk. So this is point number one. Risk does not create added value. Again, that should be clear in our mind. Risk is not a source of profit. Risk is a characteristic associated with assets, commodities, or with actions also. So it could be, always we are exposed to all these kind of risk. Uh, Islamic banks, finance provider has to bear ownership risk. In addition to credit risk, in fact, because it is in the business of owning debt and waiting for the time that they are paid. That is the meaning or the implication of finance. So because they are financial institutions, they need to go uh, to bear credit risk. Uh, so they have to bear ownership risk and credit risk. Of course, both of them can be mitigated. We can have solutions to help us reduce their effect. That's mitigation, and can be also reduced to a minimum. Instead of owning the asset for 25 years, we own it for only 5 seconds. And that is, after 5 seconds, we immediately deliver it to the customer, so we don't keep it in our ownership and under our liability for longer than these 5 seconds. That's acting smarts. That's not haram, of course, because acting smarts while making appropriate business is very important. So this is what Islamic banks do. Uh, they minimize all kind of risk, and they avoid the kind of risk that is avoidable, specifically market risk. They wouldn't buy an asset except on request of the customer that would ask the Islamic bank, buy this thing and I will lease it from you, or I will buy it from you. So buy the thing and the customer will buy it. After we take this assurance from the customer, we buy it and we make the contract. We will notice later that even a lease contract can be signed before we purchase an item. Whereas the sale agreement, the sale to the customer, cannot be signed before we purchase the item. The sale can only be done after after the bank, the Islamic bank, buys the item. Whereas for lease, you can even sign the lease in advance. Okay, so Islamic bank minimize all risk, avoiding what is avoidable among them, and reducing to minimum the others, like reducing the period of holding an asset or goods for a very short period, especially when Islamic banks, as they do nowadays, and that they give agency agreement to the customer to take delivery from the supplier. So the customer takes delivery on behalf of the bank and notifies the bank to make the second sale to the customer. And already the commodity is in the hand of the customer in the first 5 minutes, as an agent of the bank, and after activating the sale to the customer becomes the owner. But definitely, uh, unavoidable risk can be mitigated, can be insured, preferably always through Islamic insurance. Economic justice and the human rationale, and of course, Sharia requires earn by owning, owner bears property risk. If you share property with another owner, you should share its risk in the same proportion of owning it. This is why in Sharia we do not accept, in partnership, for instance, that profit and loss both to be in any proportion other than the proportion of capital contribution or principal contribution better. Whereas we accept a clause that profit may be distributed in different than principal contributions, where are loss all the time, even if the contract says otherwise, should only be distributed in accordance with principal contributions, because loss is simply a decline of principal. And we may give more share of the profit to one of the partners because of special effort or special way that he contribute more to the partnership. Okay. Uh, the issue of development, definitely Islamic finance is developmental, whereas conventional finance, interest-based finance, may be or may not be. And that is a big difference. That is because Islamic finance cannot be performed without giving signal to the producers to that your commodity is being sold. So it gives a market signal to the producer, because it is related always, or it is performed always through either sale or leasing or sharing. Okay. Uh, of course, Islamic economics rejects extravagance and wasteful of resources and nourishes thrift behavior. The Islamic economic system does not accept interference in other people's privacy. A banker has no right to decide whether financing for investment or financing for consumption. It's not a decision that a banker is authorized to make or has any ability even to make, including Islamic banker. Uh, Individuals by their own nature, by fitra, their own nature, always have personal inner incentive and zeal to create value, to become richer, to have more properties, and always have more. And that is growth. They create, by that, they create growth. The Prophet ﷺ repeatedly encouraged consumption. We have that great saying, which is very important in this regard. You probably know it or can remember it by now. The Prophet sallallahu alaihi wasallam asked people around him who happened to be around him at that time, uh, who among you prefers the property of his heir over his own property? So the answer came, obviously, how can any one of us have that kind of preference? We all prefer our own property over the property of our heirs. So he then told them the rule: your property is what you really enjoy, what you eat, what you dress, what you use yourself, or what you give as charity, because that is saved to you with God. But what is left after you die, it is the property of your heir, is not your property really. So you don't need to leave anything. Why should you leave anything? Use your property, enjoy it, or give it for charity. That is the best for you, which is really encouraging consumption. Because even charity, usually charity is a consumption by the poor, is a consumption by the area I spend it on. Governments are and should be in charge of the macro policies of development and the like, and all economic unit should abide by the regulations that are taken by the government, if the government takes regulation. And many governments do interfere in this regard, like asking banks, for instance, that 40% at least of your financing should be for agriculture, because we want to promote agriculture in our economy, and agriculture requires more promotion, and so on. So these sectorial and regional areas also, preferences, the governments may take such decisions if some region is less developed than another region, and we need to develop it to make it grow, it has more potentials, so we make that. Okay. It's not rational and not fair and not economically sound even to charge bankers to take decisions on financing preference of investment over consumption or vice versa. That's not acceptable. I think we are about to finish. Okay. By the nature of Islamic finance, Islamic banks always give market signal in their financing. And this market signal is by definition, whether they finance consumers or they finance producers, they are giving a developmental market signal, which requires or calls for increasing production and increasing employment. Uh, and of course, when we integrate ethical values in the banking transactions, imagine how much do we save on reducing financing of cigarettes. How many fires in any society happen because of cigarettes? So if cigarettes disappear, then this frequency of fires will be a lot less. So we save really resources by not financing harmful things. Similar for liquor, not financing liquor. Also, we save resources of curing the effects of the use of liquor, and so on. So withholding financing from these kind of activities and similar to them, even financing activities of the kind of Las Vegas activities. Why? That's not really useful to humanity. It's rather harmful, what they call sin activities. Even in the West, in America, they call them sin activities. Uh, okay, avoidance of transactions which contain moral impurity. That's very important in Islamic finance. Okay. Uh, and of course, in Islamic finance, we got it before that the relationship between depositors, the major part of depositors, usually in Islamic banks, deposits that aim to make profit, that are given on the basis of mudaraba contract, assigning the management to the bank. These deposits make between 60 to 85 or close to 90% of the total resources of an Islamic bank. And it depend on other regulations and so on. In some Islamic banks, you have very small amount of current account. If that bank is more flexible on withdrawal from investment accounts. Investment accounts means mudaraba based accounts. Those banks that are more difficult, put more conditions on withdrawal from investment accounts, you will find in them current account getting a bit higher. An example is the Islamic Bank of Jordan. You will find in it the current accounts about 30%, whereas Egypt Faisal Islamic Bank, in it you find the current account about 7-8% only, and most of the others, about 85%, is investment account, because you can withdraw easily from an investment account without troubling conditions, unlike Islamic Bank of Jordan. So these kind of different conditions make it more easy and make more resources in the investment account. Of course, the Islamic Bank also contribute to society, and yeah, and we discussed that before, and this looks like repetition. By focusing on sale, lease, and sharing, Islamic banks support the production and exchange of what benefits human beings in the societies. So it is really society friendly. And by eliminating interest, pure speculation, gambling, and their likes, the business model of Islamic banks is itself a great contribution to reducing oppression and economic exclusiveness in the society. And by withholding finance from of harmful things and activities, Islamic banks also contribute to social welfare. All these are major significant contributions to the society's economic and social welfare, and a great unprecedented pattern of social responsibility. This is obvious in Islamic banks, and you don't find it clear in conventional banks unless you add some decision either by the management or by the community or the government. The moral dimension of Islamic finance, again, is important. Uh, we must emphasize the importance of removing the injustice of interest as a basic moral value. Many things, all these funds that are called ethical funds in America, they invest in banks and they invest in interest-based organizations and transactions. Now, interest is definitely is one of the most uh, impure and unjust practice in the whole world. And it is definitely immorality. So you can't call it ethical investment if you invest in interest on interest basis, because you are taking something that doesn't belong to you. And this is a very fundamental moral value. It is very important. Many writers who write about Islamic finance neglect this point, and they look at other things that, oh, what is moral is giving equal salaries, for instance, to male and female, to young and old. Well, this is good. This is important also, but a lot more important is don't charge interest. Don't, because you are taking part of the property of another person without any reason. Your property does not generate increment. How come you make it acceptable to you that you take part of the property of other people through an interest based contract? So this is an important thing, and rather an important sin. And this is why in our Sharia, by the Prophet sallallahu alaihi wasallam himself, the lawgiver in a sense, because we take our law from what God revealed in the Quran and what God revealed also in what we are told by the Prophet. And God told us in the Quran that the Prophet does not speak of him out of his own self or his own desire. It is all from the revelation, but not verbatim revelation. The verbatim revelation is only the Quran, but the remaining, what the Prophet told us, sallallahu alaihi wasallam, is also revelation, but and it is from God, not from his own. So when the Prophet tells us that the sin of riba is a lot more than the sin of many other sinful personal practices or actions. This means that really the harm here, the immorality here in interest is a lot more, and has a lot more depth and importance. Okay, so promotion of halal trade is also an important thing. We all, Islamic finance, promote all these halal activities, halal consumption, etc., and investment. The third point here, Islamic finance is moral by the nature of its stemming out of the Sharia, because the Sharia, like other religions, all of them call for moralities, equity or justice in Islamic banks. Fulfillment of economic justice is a must for all economic unit in any society, and Islamic banks definitely fulfill economic justice by يعني in the negative way and in the positive way itself. In the negative way, by not charging interest, avoiding interest, and in the positive way, by supporting sale between people, supporting leasing, supporting creating new companies and expanding existing companies. So this is definitely goes toward justice in the economy. It gives equal opportunities and equal accessibility to finance. يعني in one of the books, this Algerian writer Malik bin Nabi mentioned an interesting thing here, that a woman was heard shouting in the hall of a bank in Istanbul many years ago. He told that story, telling them, "This is dirty money. Why did you credit my account for that money?" They credited her account for interest, accrued interest. And she told them, "This is dirty money. I don't want it. I don't want it to be mixed with my money. I know many people don't deal with banks, conventional banks, interest based banks, and don't take even the benefit of credit card and the like, because they don't want to come close to these activities that include interest. So they want to stay away from it as much as they can. And definitely in any Muslim majority country, a large segment of Muslims avoid making any transactions with banks simply because they want to avoid the activities of interest or relating to them in any way, even being close to that. So these the Islamic banks break this lack of inclusiveness. We include these, we allow them to bank, we allow them to come to banks. And there is an example of banks that do not have anything not permissible in Sharia, so you can easily and freely and comfortably deal with them. So definitely that يعني will affect the inclusiveness of more of these people. Uh, Now, economic equity in Islamic banking definitely is a must. Uh, should an Islamic bank finance, or can an Islamic bank finance at higher rate than the prevailing rate in the market, though they live in a market that is interest-based ridden? They should not really. They should finance at a rate equal to the rate of financing in their community, in their society, and they finance it through Islamic modes of financing, but not through lending for interest. That's correct, yes, but that doesn't allow them to charge their customers more than what conventional banks charge their customers. Uh, Yes, definitely there should be equal opportunities and equal accessibility to finance. Uh, Now, for social justice, that's a different issue. We need other institutions to perform social justice. A worker who works in a bank who has a big family of 7 children, would should the bank give him enough to feed all his children? Not really. The bank should give him salary or wage equal to the wage he gets in the market, in any other employment in the market, and the remaining of his need will be fulfilled not by the employer, but rather by the other institutions in the society. And Islam created these institutions, realizing that the market does not really fulfill social justice. It may be able to fulfill economic justice if we remove from it any monopolistic elements or any يعني huge or substantial misinformation or lack of similarity of information. So if we avoid that, yes, we can perform economic justice through the market, but definitely social justice is not fulfilled in the market. Uh, there are needs for government policy and to support the less privileged. There is a correction here, I think. I here. Okay. To support the less, we need government policies and we need institutions We need institutions that created, and our Sharia created the institution of zakah, which is obligatory and it is defined as right of the poor. It is the right of the poor in the wealth of the rich. To an extent that I read in some of our ancient fiqh books that if a person did not pay his or her zakah in 1 year, the amount due becomes owned by the poor in general in the area, and they become partners with him. Next year, any profit should be divided between these partners. The amount that is not paid of zakah becomes owned by the poor in general, and they are partner in the wealth with the rich, and any future profit will belong to both of them, not to him alone or to the rich person alone. This is an interesting thing, and in an interesting result of being really a right for the poor guys in the society. So uh, we need special institutions for the non or less profitable finance users, for the poor and needy, for the microfinance, because microfinance, commercial banks, Islamic commercial banks included, are not suitable to finance the micro business. Micro business requires a special arrangement because in micro business collaterals are almost don't non-existent at all, so they cannot provide any collateral or any guarantee to for the financing, and that needs a different arrangement, different ways of financing that accommodate them. Yes, that يعني it should come from the taxpayer money, contributions to social policies toward equity, financing quota for the profit institutions designated to the less privileged. This can be done also by the government by imposing certain quota as part of the social responsibility, that certain percentage of the financing of all commercial banks in the country, Islamic or interest based, should go toward microfinance, for instance, in with the appropriate definition of microfinance, in fact, also, because the American definition of small businesses is not really suitable for most developing countries. That is a business that has less than 50 employees. In many developing countries, having 50 employees, this is a huge business, not only a large business, but rather a huge business. So there are many businesses that have no employees at all, the same proprietorship only, and many businesses that are sufficed with one or two employees. We need to redefine small and micro businesses really in a definition that is suitable for the developing countries. Uh, okay, Islamic banks and the credit creation. That is an interesting point, and we need really to look at it. What causes what is called the credit creation? Two things here. The major thing, and there is a process or procedural matter. The major thing is banks are required to keep certain percentage of the total deposits they have in cash form. So whatever they have as total deposits, that number there ought to be That percentage should be kept always in cash form. Part of it could be in the vault of the bank, and part of it could be as deposit with the central bank. Now, that means that when, if we take all banks together in the economy, when any bank pays any, gives any financing, it will give financing, suppose to for buying an airplane for to an airline companies. This financing will be paid to the producers of the airplanes, to factories, and of course the factories use part of it for salaries and for raw materials and others, and all this money will end up deposited again in the banks, in their own bankers. Very often it is done directly, even through a transfer from one bank to another, from the bank of the buyer to the bank of the seller, through a transfer. So this money, in other words, ends up coming back to the bank. And when the bank, as a total system, and each individual bank is required, say, to keep 10% of the deposits they have in the form of cash, it means that with time, the financing they give will come back to them as deposits, and it will be all these deposits will accumulate in their accounts, compared with the hard cash that they have, that which is the cash that is issued by the central bank or the by the Ministry of the of Finance in the country. And they continue by the zeal of making more profit to give more financing until they reach that percentage. So we consider it like the total amount of deposit are 10 times the amount of cash that is issued by the government, that is held in the bank, whether in its vault or in the central bank. So this means that whenever the government, suppose, increases the quantity of cash that it throws in the market by $1 million, for instance, the banks will be able, through the idea of deposits, giving financing, and then coming, this financing that is given will come back to the banking system, to the banks again in the form of deposit, again giving financing and coming back again in the form of deposit, and that makes them, with the idea of profit maximization, giving as much financing as they can and as the law allows them. Again, this $1 million hard cash that was issued by the central bank or by the government will end up having deposits in bank equal 10 times that much, if the reserve that is required is 10%. So the final thing, that the main reason and the obvious reason for credit creation, because all these deposits in banks represent really credit to people. People can use this money one way or the other. Even in time deposits, they use them at the expiration of that time. But in current account, it is usable at any time. So this is credit they can use at any time. And so it means that the banking system is able really to create 10 times the amount of cash issued by central bank or by the government, depend on which authority issues that. So we will have that much available kind of money in the market, because it's like money also. Deposits in banks can be used exactly as money, and it is money when you can withdraw it at any time. Definitely banks know that not all these people will come to withdraw it. So only 1 or 2% or 3% of them will be withdrawn each time. But if a rush happened, the bank will declare bankruptcy, of course, and cannot do anything, cannot respond to all these, like what happened to the Universal Bank in Silicon Valley 2 years ago. That exactly what happened. For a rush, the bank was not able to fulfill its obligation to give this money back to people because it doesn't have it really. And all was created through this cumulative effect of the fact that the reserve is only required to be a small percentage of the total credit that exists in the bank, or liabilities uh, in current account and time deposit in the banks. So this is the way, that the essential reason for money creation by banks. And notice that applies also in the Islamic commercial banks, exactly the same way, because it's exactly the same way. The difference between a conventional bank in this regard and an Islamic bank, that an Islamic bank will give you a car, whereas the conventional bank will give you $40,000, and you take this $40,000, pay them to the car dealer, and take the car. Now the Islamic bank will pay that 40,000 to the car dealer and doesn't give you the car itself, and the car will be, for instance, 50,000 to you, with the profit that the bank makes as in this transaction. The conventional bank will give you the 40,000 and ask you, say, 2 years later, to pay 50,000, which is the interest. But here, in both cases, that 50,000 goes to the supplier of the car, and the supplier will deposit it back in the banking system, suppose in the Islamic bank, and the Islamic bank will be able to give more financing this by selling another car, or selling another truck, or any other item that its customers will ask for. So the same effect then of partial reserves, it is the same effect whether Islamic banking or conventional banking. There is another way, which is procedural, that is done in many countries. To my knowledge, it's not done in the United States, in the banking, in the accounting system. This is procedural accounting issue, really. In UK, for instance, when you go to the bank to ask for financing, suppose they give you 100,000 pound financing. Once this financing is approved, it is given as a credit in your account. So they open for you. And if you suppose, if you don't have a current account, but if you have a current account, they will credit your current account for 100,000, and you use it any way you like. And you may you write checks to other people, you send transfers to others, and use it any way you like. So here they create the credit accounting wise. Of course, on the debit side, they'll put your name under the item of loans given to X, and this X will have a liability, and a liability on the bank, a current account with the bank. So we put credit in this current account, and we put debit in the loan account. And this is when this, of course, we increase the current account, and current account is part of the quantity of money. So the bank here, by this accounting procedure, immediately created, it changed the quantity of money in the economy, created some credit. By this created money, so to speak, by this creation of money, they have given, they create money only by the accounting procedure they do. In America, for instance, to my knowledge, most banks, when they give you this loan, they put it in your account as a note, not as a credit in your account that you can withdraw without having any balance in the account. You can withdraw up to 100,000 if they gave you a loan of 100,000. So it is written as a note, like the maximum amount you can withdraw blank without having any balance in the account. You can withdraw up to this 100,000 that is given to you as a loan, and then you will be charged interest according to the amount that you withdraw, not according on the 100,000 itself. In Britain, the accounting system is, as I mentioned, that they credit it to your account, and you have a debit account under loans for that. So this is the procedural way of creating it. It's simply accounting procedure, really. But the major one is the fact that we have partial reserves, not full reserves. Uh, a question again here, which is the last question here in this slide. Can a modern economy tolerate 100%? That's a question, really. Some economists say yes, and it has to, should be rather, and this is better. And some of them take this idea, some Islamic writers take this idea and claim it is Islamic. It's not Islamic or Quranic, it's a matter of policy. And if the policy is done that to allow banks to create credit, that's fine. And Islamic banks in all countries today, wherever Islamic banks exist, they contribute to the process of credit creation, of what is called money creation, like conventional banks, exactly, because all countries in the world today adopt the concept of partial reserves requirement, not 100% reserves. Some Islamic writers say, oh, 100 reserve, 100% reserve is an Islamic idea. No, really, it's not. That's their opinionated. Their opinion is that, but really, no, because again, the freedom of banking, the freedom of the bank, and you don't want them to hold cash just idle in their vault without any good reason. Uh, Are commercial Islamic banks the only financial institutions in the Islamic economy? Definitely not. We have investment banks, Islamic investment banks. We have also insurance companies. We have financial companies that provide financing also with their own resources. We have Islamic insurance companies, I said, which are very often called takaful. And we have social finance institutions that deal with the issue of social justice, collecting zakah and distributing zakah. We have awqaf also. Awqaf is a financial institution. One of the forms of awqaf is what is called cash waqf. That is, some people may make a cash amount as waqf, and this cash amount can be used in either of two ways. Either the amount itself to be given as interest-free loans to people who need loans and then pay it back, and then again give it to other people and circulated in that way as interest free loans, or it can be deposited in an Islamic bank, and the return of it will be given for the objective that is determined by this waqf by the founder of the waqf. So the cash waqf can take either of these two forms, and that works. But if we come back to commercial Islamic banks are institutions that serve a small segment of the economic universe. That should be clear in our mind. These are not institutions for the whole economy, nor institutions for all individuals or all people in the economy. They serve only segment. The segment is the rich and or the able to pay. Only this segment is served by Islamic banks, and also by conventional banks, in fact, because they do only banking activities using resources from other people. They are constrained by the nature of wakala from depositors and shareholders. Both the relationship between the management of the bank and depositors in mudaraba deposits, investment deposits are called, also in Islamic banks, and shareholders is based on wakala. And the wakala does not allow the agent to make any charity. I gave you my money to make profit for me only as a shareholder in this bank or as a depositor on the basis of mudaraba. I gave you my money to make profit for me, and you have no right, and you would be violating Sharia if you give any interest-free loan out of my money, or if you give any charity. You don't give any charity out of my money. You only use my money to make profit. Otherwise, you have betrayed the wakala. You are not honest in fulfilling the wakala requirement that I gave. And also, regulations in all countries, again, emphasize this idea. Now, other segment of the economy have different financial institutions like Islamic investment banks, like Islamic micro finance institutions, like Islamic insurance institutions, like institutions for the poor and needy, like Zakah and Awqaf and NGOs and government treasury. All these are institutions that may serve the poor and needy, but not really commercial banks. Thank you very much. I think we reached the end. Now we still have about 15 minutes. If you have any questions, I am open for questions, please. Go ahead. How do I enlarge this here? Yeah. Okay. Any question? Now you can close. Well, it's okay to keep recording for questions. Any question? Okay, if there are no questions, see you inshallah next week. But please write the homework and do it exactly as required. Thank you very much. Salam alaikum.
Professor.
Go ahead. There is a hand now. Mariam.
Oh, I
Go
don't
ahead,
have a
Mariam.
question. I don't have a question. I was just giving a thumbs up.
Oh, you don't have a question? Okay. طيب, thank you very much. يلا, السلام عليكم.
وعليكم السلام. جزاكم الله خير, Professor.